Well, I think it has to be seen as a whole and as a package on the one hand, and also as a complement of the existing regulation, because there is already a very detailed regulation, the too big to fail framework. On what it did is we evaluated, we analyzed Credit Suisse failure. On what we came up with are measures we feel are a gap to or can cover the gap we have with the existing regulation.
Critics say that Switzerland and the regulators had all the tools that they needed to tackle Credit Suisse, just didn't have the motivation and didn't have the expertise. If that is the case, how do new tools help?
Well, I can really not give you any judgment. We have a parliamentary inquiry committee that is looking exactly at these questions, so I cannot tell you if the supervisory authority had in fact the tools but didn't apply them. I don't believe it, but we will see. But I think it is always very important to really also take the lessons and learn the lessons from such a crisis. And if you see some gaps in the legislation, you have to come up and really, this is, I think, the responsibility also of the government, that you come up with the legislation that is needed for the future, because the central aim of the government is really to make resolution possible. You know, resolvability is a main aim, on the one hand because we want to protect the Swiss economy and the taxpayer, and on the other hand because it is important that this legislation is really viable and feasible and credible.
There was no resolution, though, and FDIC criticised the process adopted here, that there was a forced merger, there was no banking resolution used, calling it a missed opportunity. Should you have gone down the pathway of resolution?
No, not at all. That would have been a high risk, not only for the Swiss economy and the Swiss financial centre, but I think there would have been collateral damage also to the world economy and the international financial system. And by the way, in fact, we had a resolution, but we had a resolution in merger. So we had UBS that bought Credit Suisse. On the other hand, we had support from the government with the liquidity that was provided by the central bank and also the government.
Some are now calling UBS a monster bank because of its size relative to the Swiss economy. Is it now not only too big to fail, but too big to regulate?
Well, I wouldn't say so. I mean, it's just important to take the right measures, although, you know, you cannot prevent every crisis. It's just not possible, because if you have a crisis, usually you analyze it, you take the measures, and then when you have another crisis, you see, oh gosh, the crisis doesn't really comply with the measures, or doesn't really respect the measures that you have taken earlier. You know, so what I want to say is there is a difference, or usually there are differences between crises, and it is difficult to regulate everything. But what we can do now, and what we did, is we evaluated the situation, and we really tried to propose the measures that are necessary so that resolvability really is possible.
You could understand regulators being concerned about the risk now that UBS poses, but is there a balance about ensuring that it's not over-regulated so that it can still grow from here?
Well, this is always a risk in every crisis. I mean, be it in banking, or look at the pandemic, or look at other situations where really maybe governments are surprised, or measures have to be taken, also urgent measures. And this is always a bit a risk of a crisis that as a consequence, measures are taken, or that over-regulate may be a case, of course, yes.
Sergio Motti recently at the Ambrosetti Forum was talking about the consolidation that took place and how it could potentially be a blueprint for Europe. Do you think there's anything in that, in what you've now created in Switzerland? Do you think Europe should also think about creating much larger banks like UBS?
Well, I think it can be a blueprint, or I would also say that our report, and this is also maybe the talks I had, I can tell you with my colleagues, showed that they're very interested in the measures we have now come up with. And they also see gaps in their own regulation. And maybe also this case can maybe be an example for other jurisdictions. And we have also international contacts, of course, especially with the FSB, because there are also some legal risks, with resolution. And this is very important now to really seriously look at the resolution risks, like the bail-in. They have been identified, and so it is important that countries with big banks, with systemically important banks, really look at that very closely.
Do you think that's more relevant today as we talk about a CMU, banking union in Europe, changing the existing backdrop for banks in Europe?
Well, I don't know, because Switzerland is not part of that. So we're just outside of that, but that doesn't mean that we don't cooperate. It is very important now to share our experience in the international organizations, especially Financial Stability Board, also the Monetary Fund. People are very interested in our findings.
On a different note, let me ask you about the Swiss economy, because you're right on the border with the rest of Europe, and you're facing in and around you all sorts of slowdown risks around growth.
Yes.
How concerned are you about that slow growth in the Eurozone spilling across to Switzerland?
Well, I'm very concerned, because I think that this slow growth has different reasons. I mean, we have a geopolitical situation that is very difficult. That, of course, has an effect on the economy in Europe. Then, we had a period with low interest rates, and there were no structural changes in many European countries. Now, with the interest rates going up and debt also going up, servicing of debt has become more costly. And this, of course, is also a risk to financial stability. In Europe and maybe also in other countries, because the US really has a high debt level as well. So I'm quite concerned about it, because Switzerland is a country that is export-oriented. 50% of what is sold abroad. And so we really hope that they're doing better, or getting better soon, because the Swiss economy is quite robust. We have an inflation rate of 1%. The central bank was able also to take back the interest rates. We have a lack of qualified labor, which means we have not a big unemployment rate. It's still robust, but of course we feel the impact of other countries and the geopolitical situation.
As you highlight the export situation and your reliance on global economies, how concerned are you that we are shifting towards a new regime, a retreat from globalization, jostling from two economic superpowers, US and China, to get ahead? Yeah. Is that creating fresh risks?
That is a risk, of course, but on the other hand, they have to sell their products as well. They're also interested in open economies. I think there is no alternative to open markets and open economies, but because this is the only guarantee for employment, the only guarantee also for income, and also taxes, of course, if companies do well. So I think this is not a good development. It is important that in multilateral organizations we really coordinate our efforts.